following is an update and technical analysis on the USTECH100 NASDAQ futures displayed throughout the daily interval, in which I will additionally cover the 2x levered QLD, which is a big component tracking a duo levered price action of QQQ, which is the largest component to the NASDAQ. And I believe we've reached a critical juncture where we had additionally had a breakdown sell signal off a concealed and hidden ascending uptrend support level, which gave way for a much larger breakdown. We have the 50-day moving average beginning within the beginning stages of churning to the downside in correlation of its 200s beginning to appear. And if and when we get the continued downside, that could result in a potential death cross bearish continuation for these moving average realms. And that would be just a solidified major trend change and shift within the moving average. Make no mistake, the price is in a consolidation phase after a strong downtrend. After the issuing the breakdown sell signal in my previous video, we are holding above the 382 fibs retracement, which needs to be held by long traders and or bull traders really at all cost in the entirety of that move, with multiple major reactionary highs and lows really across that entire structure of time. And the backtest down to the 618 fibs retracement, which has been defended pretty heavily by bulls here, was good for almost an 8% crash to the downside. And here we are off the 1933 one handle. I believe the long trade setup is very, very aggressive. Long traders, they need to pop the 19,837 price resistance level to really usher in a reclaim of the 786 fibs, which is the 19,957 handle, to usher in a short covering rally. RSI is around the 38 handle, still weak, indicating downside risk are still within nowhere near out of the woods, with the moving average convergence remaining bearish with potential momentum weakening. A reclaim of 19, call it the 19,862 handle, auto issue in infusion of health being spurred back into these momentum indicators. But make no mistake about it, the price action in this indice is forming a bear flag just under the key resistance level, and that is as well defined as you can possibly get, with a perfectly measured flagpole down to the 10 fibs retracement, call it the 17,025 handle. Once again, the MACD remains in bearish territory, supporting the downside case. If and when the bear flag is confirmed, especially if and when short sellers and or bear traders crack this key inflection point, validating that the flag has been broken in a potential bear flag confirmation that a larger drop towards these key technical levels are possible. The line in the sand, in my opinion, lies within the 18,900 level in correlation of the 50% fibs retracement, call it 18,890. And that is where I believe a ton of stops, margin calls, forced liquidations to go off, and a huge levered long rush towards the emergency exit doors. This bear flag is confirmed. The price is heavily been respecting Fibonacci levels, with projections near the 618 level, the 19,330 handle, and the 786,957 handle. If and when prices lose the 18,900 handle, I believe the next major support level is there at the 236 fibs retracement. Ultimately, the 1618 fib extension suggests an extreme downside target around the 16,800 handle. The bear flag breakdown is the primary setup. Make no mistake about it. The ball is in the court of the bears and the short sellers, while a move above 19,800 could trigger a massive short squeeze. Taking you out to QLD, a 2x levered long setup displayed within the daily interval, and I believe we have a very significant concealed and hidden ascending uptrend price support level, which is a plethora of major reactionary highs and lows, cuts right through the bottom of a gap, and that is a highly psychological level. Bulls, once again, they need to take out the 950 handle with conviction. The death cross bearish continuation phenomenon is confirmed within this 2x levered as the 200s, as the 50-day moving average undercuts its 200, massive volume spike around that region where a ton of potential moving average traders pile in short. where the vast majority of the masses have bought around the 111 price range, ultimately taking out that huge price support level, broke down, put in a back test, and was off to the races to the downside. Where because of the massive volume profile up above, the masses usually always chase euphoria. And while I do not deny that the risk-reward ratio favors to the long side an aggressive short trade setup, in my opinion, where the old adage goes, as history doesn't just rhyme, it punishes the unprepared.